What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers, so please be careful. Don't get yourself scammed. If you want up to 12 free stocks, Webull is going to give you up to 12 free stocks when you open a new Webull brokerage account. Put any amount of money in that brokerage account. They're going to give you up to 12 free stocks for just trying out their brokerage app. Those up to 12 free stocks will be valued up to $30,600. There's a link down in the description box of the video. Click on that Webull link. Open up that new Webull account today. Go get that free stock. Go get that free money. So we got the June 2023 jobs report today. And the economy added 209,000 new jobs in the month of June. Expectations were that the economy would add 240,000 new jobs. So expectations were not met. What does that really mean when we're talking about our economy? Well, that tells me all this work the Fed has done over the last 18 months is working. The Fed has been trying their very best through increasing short-term interest rates, aka the Fed funds rate, to cool off this red-hot labor market. And it looks as though they're starting to succeed. Now, the economy in May of 2023 actually added 309,000 jobs. 1 month later, it only added 209,000. That's 100,000 less jobs. And interest rates that the Fed has been pumping up, I believe, contributed to that. Wow. What does that mean, though, for the economy? Some are speculating we're headed to a recession. Remember, the Fed has already made it clear that they're going to keep increasing short-term interest rates in 2023 to the tune of about 50 more basis points. It's widely expected in their July meeting, the 26th and 27th of July to be specific, that they're going to raise short-term interest rates by 25 basis points. Wow. Are we headed to a recession? And I know we've been wobbling back and forth on this recession thing, but when you see that type of drop in jobs, you got to ask yourself, should they stop increasing short-term interest rates now based on this June jobs report? That's a good question. I think they should. Will they? I don't believe they will, because they've already committed to this 50 basis points. 25 basis points this month in July, and then probably another 25 in September. Just don't want to see us get pushed into a recession, because that's not really what the Fed wants to do. They really want a soft landing. They really want to get inflation down without throwing the economy in a recession. Wages, month over month, slightly increased. I think they came in year over year at about 4.4%. And that's really one of the things that the Fed is really watching. They're watching wages, because the more wages people make, the more possibility people will spend money and continue to keep inflation high. So the Fed will watch wages especially close. because that's the one will indicate people's buying power, right? When you look at the industries that added jobs in June, it was led by the government, added about 60,000 new jobs, followed by construction, healthcare, and social services. A lot of folks thought leisure and hospitality would be the leader when it comes to adding new jobs, but they were down the list. Leisure and hospitality only added about 21,000 new jobs in June. So they've cooled off considerably. But back to that question, man, of recession. Is it going to happen? Will the Fed push us into a recession? And it's up to them. I think the only way they stop us from going into a recession is they got to stop increasing short-term interest rates. Will this jobs report change their mind about bumping short-term interest rates by 25 basis points in their meeting at the end of this month? Will that change their mind? I don't know. Now remember, next week on July 12th, we got the CPI inflation report for June coming out. And that's going to tell us what headline inflation is and what core inflation is. Right now, headline inflation is about 4%. Core inflation, I believe, is around 5.3%. And that's really the one the Fed really pays attention to, is core inflation. And it's been sticky. It hasn't been coming down as rapidly as headline inflation. So that'll be another piece of data that the Fed will get next week to give them some type of indication of how the economy is doing. July 18th starts the earnings reporting for a lot of our big companies. A lot of our S&P 500 companies will start reporting their Q2 2023 earnings. And that will also be data that helps the Fed determine whether they're going to increase short-term interest rates at the end of the month. So we got to watch that. And again, guys, I'm no expert here. I'm just giving you my opinion. I always recommend you guys go out and do your own research, because it's important that you go do your own due diligence. I'm just a guy who did my due diligence, and I'm giving you my opinion. This is not a convince you channel. It's just a channel where I give my opinion on different financial topics. So do your research and come up with your own conclusion. But what does that mean for me as an investor? Either way, I'm going to continue to invest and buy assets, because assets are still on sale, specifically paper assets. They're on sale. No question. So I'm going to continue to buy them. Dollar cost average every single month, buying my favorite ETFs, my favorite index funds, and then sprinkle in a little bit of individual stocks: Tesla, Apple, Nvidia, Bank of America, Wells Fargo. That's it for me, man. Pretty simple. Pretty cut and dry and simple. I'm not going to do anything different, right? If the Fed raises interest rates, I don't think that's going to affect the stock market, because the market has already priced in the 25 basis points in July. If they raise again in September, in their September meeting, 25 basis points, I don't know if that's priced in yet. It could be. I don't think it's priced in yet, even though the Fed has said they're going to do that. I think with this jobs report coming out, not beating expectations, I mean, it was way under what the market thought the economy would add. And see, here's the thing, man. Here's a train of thought. People think, okay, well, in order to bring inflation down, yes, you got to soften the job market. But the problem is when you soften the job market, if you soften it too much, it throws us into a recession, because people stop spending altogether. And 70% of our economy is based on consumer spending. So you can't stop spending completely, but that's what will happen if you soften the job market too much. If too many people can't find work, if too many people start losing their jobs, then that throws us into a recession because the whole economy shuts down because 70% of the economy is dependent upon people spending money. That's the catch-22. Drop me some comments down in the comment box and let me know what you think about the jobs report coming in at 209,000 when it was expected there would be 240,000 new jobs added. Wow. Didn't even come close to hitting expectations. 100,000 drop from May. Wow. Drop me some comments and let me know what you think about that. If you want them 12 free stocks from Webull, guys, you got to click on that link down in the description box. Open up that new Webull account today. Go get that free stock. Go get that free money. If you're stopping by the channel for the first time, please consider subscribing. Share the video. Smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm going to catch you on the next video. Peace. Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.